Thank you for coming back to the House of Banelord, and today we're going to talk about the last part, the fourth part on our cash flow conduit. It's called investments. This is the most passive income you can basically get in terms of making money, basically. Now, investments is literally what it basically means is that you invested capital, your money, into some sort of entity or vehicle that it will either do one or two things. It will either create wealth in terms of asset appreciation, or it can actually pay out in terms of income, cash flow. I suggest you do look for investments that do both, basically. Real estate, for example, is it's a good example. When I moved into this city, I owned a property in another city, and I created wealth through that, and which I bought this property, and for a while I was renting this room to tenants, I guess, and they were paying me rent, so I was making rent money. That was actually pretty good. I was making it for a while. There's obviously some drawbacks, but I'm not doing that now because I can't stand people, basically. I mean, I can't stand tenants. It's just if you do it for a while, you're just like, I just don't want to do it anymore. So I decided to go to a different room. That's one way. Now, to do that, you gotta do your math, basically. You have to calculate your mortgage, your expenses, and if the rent will exceed that, at least by 20%. You got to factor in the fact that there's a risk involved in it that people cannot pay. So you got to really screen out the bad ones. You also, so basically, when you get your rent minus your expenses, you're looking at something called the yield, how much return you'll get. But you also figure out about the future prospect of the specific property you have. In future, do you think it's gonna appreciate? Because not all properties appreciate. Some properties in some places appreciate hyper. Toronto, Vancouver, for example. Other places, eventually, you got to do your research on that. In other places, no, real estate does not go up everywhere. Example, some of like St. John's. I mean, I'm actually looking at that property. Whole market right now. Yeah, it collapsed basically. There was some oil business in 2009, I think, and then they lost out on making an oil rig, and the whole housing market literally collapsed. So if you own property in 2009 in St. John's, New Brunswick, you lost 30%. That's painful, but it comes with territory. If you were to invest in stocks, you might want to look at something that pays a dividend. For example, like certain mature industries, like banks, insurance companies, utilities. They pay a dividend. It's not very much though. You're looking at 3% possibly. Any more than you're looking at a little risky, because basically how that works is that if the dividend is too high, the market is calculating that the stock will eventually have to cut it because it can't afford it. So that's why the stock is actually low, by therefore increasing the dividend yield. So if you're looking for a good company, 3-4% is actually really good. Anything more than that, then yeah, it gets a little dicey. Unless you're looking at a REIT, that's a whole different structure. They're okay for higher dividends. One of the things I want to stress when you're investing in stocks is that look for stocks that have something called a dividend reinvestment program, a DRIP. Some companies don't offer it, but some brokers they do. So, for example, how it works is that if you own a lot of shares of a company and pays a dividend, you don't necessarily have to take this dividend as cash, because if you don't need it, you want to reinvest it. And so what they do is that they reinvest it for you, buy more shares that don't cost you in terms of transaction fees anything, and eventually it's almost like compound interest, but even better because it grows, assuming the stock grows, of course. So yeah, and obviously the use of leverage, as of what I was talking about before, can obviously help you in this particular business. Is actually something to look at, and it can create a huge chunk of your wealth. So with all those four things, you're all set to make yourself financially wealthy. Thank you for your time, and you have a great day.